What happens when hotspotting guru Terry Ryder joins me for a yarn? Terry, how do we get in this mess?
10 or more years of bad policy by politicians.
We solved the housing crisis.
You've got to take all the taxes out of the system.
I would have a moratorium for 3 to 5 years that anyone that rents out their room, it won't affect their capital gains free implications when they sell that principal place of residence.
You've got to incentivise mum and dad investors. They've been demonised.
Now, this is going to be controversial.
Honestly, is there a single politician in the country that has a clue?
Plus, find out which capital city is Terry's top real estate tip.
It's the high-tech innovation capital of Australia. It's got a big education economy. It's got a big military economy. It's a great lifestyle city and it's affordable.
It's an action-packed episode of 10 with Ty. Hi, I'm Tyron Hyde, the CEO of Washington Brown, the property depreciation experts. Now, I'm a qualified quantity surveyor and also a best-selling author who's helped hundreds of thousands of property investors over the years pay less tax through depreciation. I'm also an avid investor, which is why I created the podcast series 10 with Ty, where I ask the smartest people I know the same 10 questions to unlock the keys to their success and hopefully leave a playbook for my family and your family too about investing. Now, this podcast is general in nature and not specific to your financial circumstances. We always recommend you sit down with an accountant or financial planner before making any investment decisions. Now, let's get on with the show. Hello, welcome to 10 with Ty. Today I'm super excited. I've got Terry Ryder, CEO of Hotspotting here, general property guru. He's written 4 books. He was an ex-AFR property editor and he's a property mentor. Welcome to 10 with Ty, Terry.
Welcome to you. Welcome to the conversation. It's always good to talk to you about anything, but particularly about real estate.
Now, Terry, you and I have done many webinars and podcasts over the years, but I've got a new concept podcast for us. 2 grumpy old men talking about property shit. How do you think that would go, Terry?
Look, I can't think of anything more entertaining and informative than that.
Very good, very good. Now, Terry, I get grumpy when people of our vintage say things like, oh, when I was 20, it was harder. Interest rates were at 17%. But I've just done the maths, right? In 1989, the median price of property was $175,000. And the average wage was about $25,000. So about 6.5 times earnings. Today in Sydney, it's $1.6 million and the average wage is about $80,000. So about 20 times earnings. But it gets worse. Back in 1989, stamp duty was 3.5% of the purchase price. Today, it's about 5.5% in Sydney. Terry, how do we get in this mess?
10 or more years of bad policy by politicians. I mean, the people who stand up in front of the cameras and say they're really, really concerned about housing affordability and young people's ability to get into housing are the people who have created the problem. They've increased the cost of new housing massively. Did you know it costs almost $500,000 to build the average new home? And so that's just the housing cost, doesn't include the land cost. Mm-hmm. It's increased 53% in the last 3 years. And that's primarily through government policies, changing the regulations to make things safer or more environmentally friendly, or whatever the reason. They keep changing the rules, adds to the cost of housing, makes investor property ownership more and more onerous, so more and more people are dropping out. And that kind of explains why we have a shortage of everything in real estate right now. We've got a shortage of rental properties. It's a crisis. We're not building enough new homes because it's too expensive, and we've got a shortages of everything that goes into building new homes, and we've got a shortage of properties available for sale. So when you've got high demand, as we have right now, and shortages of everything that matters, that's a recipe for increasing prices and rents.
Mm-hmm. I was just looking at the ABS stats for the amount of dwelling commencements, not approvals, commencements, which is probably more important. In March of 2021, it was about 20,000 for the month. Today, or last month, it was 12,000. So it's actually nearly half. So I don't think it's going to get any better.
Well, the figures from organisations like the Housing Industry Association indicate that our current level of production of new dwellings, approvals and commencements is the lowest in, I think, 12 years. Now, this is happening at a time where the federal government says we're going to be building new housing at record levels. We've never built 1.2 million new homes in a 5-year period ever in the history of the nation. They want to do it now at a time when builders are going broke every day, and I do mean every day. The cost escalations mean you can't build homes affordably. The shortages of material, shortage of tradespeople, the big infrastructure, the big headline-grabbing infrastructure projects that governments have announced are sucking all the tradespeople out of the home building industry. So we've got all these problems in an industry which cannot possibly meet that target of $1.2 million new homes. And maybe they'll do half that in the next 5 years, but they're certainly not going to go close to the target. It was just a press conference opportunity by politicians. And I often think that the source of so many of our problems in Australia is they never think beyond the press conference.
Mm-hmm. I had a meeting with a major developer in Sydney the other week, and he said to me, if you think we've got a housing problem now, you wait 6 months. Because they're literally not tendering on jobs. They know that the builders are the tradies, they're been squashed, right? So he's just sort of wait for 6 months. Hopefully the building costs will come down, but he can't start. I know many developers just are going out of the industry because it's too hard to work.
Yeah. Well, I know a developer who has been one of the major developers in Queensland for decades. He's been in the industry since the 1980s, and he's been very successful. But his very big company would typically build high-rise apartment buildings, saying, look, we cannot, because of the way the numbers stack up, the cost escalations, etc., we cannot build a project now unless we can sell the apartments for more than $1 million each. So it's got to be prime location, top quality luxury apartments. Nothing else stacks up financially for developers like that.
And one of the problems with that is that you need pre-approval or pre-sales to get the development funded, right? Because banks generally want you to have, the big four anyway, generally want you to have a number of pre-sales. And, if you can't get it, those pre-sales, they just can't get off the ground.
Yeah, well, that's another example of the really bad governance that's caused this problem. About 5-6 years ago, they decided they pretended to address the affordability issue by squashing foreign investors. They had an inquiry and decided to scapegoat foreign investors for causing bad affordability. So they didn't ban foreign investment. They just slugged them with all these new and increased taxes. And that sort of wiped out foreign investment in Australian real estate. Now, just in the last month or so, that have announced further increases in taxes on foreign investors. Now, foreign investors buying off-the-plan apartments is one of the things we need to happen so builders can get their pre-approvals and get finance. Wiping out foreign investors is one of the reasons we have a shortage of dwellings in Australia at the moment, and in particular why we have a shortage of rental properties, because it was politically convenient to scapegoat foreign investors who were never the problem. They were actually part of the solution. I've wiped them out and it's just added to this problem, this accumulation of policies, APRA changes to lending rules, etc. They've all accumulated over the last 5-10 years to a situation where we have this massive shortage of everything, and there's no easy fix to it.
Let's be some grumpy old men and let's solve some of the problems, Terry. Let's play a game. We've got 3 things that we would do right now to address this problem, the housing supply issue, etc. Let's go in turn. I'll say, Terry, you go one. I won't answer. We won't comment on each other's idea. You ready to play that game, Terry?
I am ready to play that game.
What would be the number one thing you'd do right now, Terry, to address the housing problem in Australia?
You've got to take all the taxes out of the system. In Sydney, 50% of the cost of a house and land package is taxes, government taxes, fees and charges at all 3 levels of government. You've got to defuse that if you want to have affordable housing and a decent supply of housing in this country.
Great. I would, according to the ABS, there's one other one. According to the ABS, there's 13 million vacant rooms in Australia, right? Not houses, vacant rooms. And one of the detriments of why people don't rent out those houses is because it could affect your capital gains tax implication when you sell the principal place of residence. I would have a moratorium for 3 to 5 years that anyone that rents out their room doesn't have to, it won't affect their capital gains-free implications when they sell that principal place of residence. I'd even go one step further. Pensioners can do that forever. You'll go.
Yeah, look, we've got to do something about the whole issue of red tape, delays, regulations, adding to the costs of creating new dwellings. That's a big part of it. It's not just the input costs. It's not just the taxes. It's the red tape. That's a huge part of the problem.
Mm-hmm. All right, my gut. So the Greens have one of their policies is that all public land should be developed for public and social housing. I agree with that. But they also have a policy where 30% of private land sales that be developed should be, what's the word I'm looking for, mandated that it has to be for public and social land as well. I tend to disagree with that. I think it's a bit Putinish, but I think it should be encouraged. So I'll give you an example. Let's say a developer's got a block approved for three stories. If he can get that approval to 6, he must give away 1 floor as a social housing to the government for free. He would get the additional 2 floors. If he was to give away 1 floor and he gets to keep the profit of the 2 floors, but he has to build it all, so his donation is construction, that would encourage him to have some more social and affordable housing.
Okay. Whether or not people would be willing to do that is another matter. Look, we've got to stop adding to the costs of constructing new dwellings. Every time a state government passes new regulations about, the design of houses, they make it more costly. And it's been going on for a long time, but particularly in the last 3 years. As I said earlier, the cost of building the standard dwelling, a house in Australia, has increased from $320,000 to over $490,000 in 3 years. That's a 53% increase in just 3 years. And that's not including the cost of the land. People like the Greens talk about, affordable housing. You cannot build affordable housing because no matter what your intention is, the structure is still going to cost what it costs. And the cost of building that typical house in Australia is now almost $500,000.
Yeah. Well, as a quantity surveyor, I know I said I wasn't going to comment on it, but as a quantity surveyor, there's a thing called the Building Price Index, which is different to the Consumer Price Index. And since the AIQS started tracking that, the Building Price Index has never gone down in history. And I can't see it happening anytime soon.
No, it's quite the opposite is happening just at the moment. And, they've got to address that. But honestly, is there a single politician in the country that has a clue? I don't think so. I haven't. Look, we monitor media with what we do because we're basically researchers, and we're scouring media and online sources of scraps of information that inform what we do. And so we're looking at what's in media every single day right across the country. And I've not seen a single politician or journalist for that matter actually ask the question, how did we get in this mess? How did we get to this point in time? Because, vacancies below 1% is unprecedented. I've been doing this for over 40 years, and I've never seen vacancies so low in so many places. But no one seems to be even asking the question, how did we get here? Because if you don't understand that, you can't fix it.
Mm-hmm. I think the Minns government's plan of having, approvals around trains, hubs, etc., is a good idea. But I thought of that about 15 years ago, and I'm not in that role. But I thought it was a bit of a no-brainer. You go to Tokyo, and you see that after every station.
Yeah, well, we've got politicians seeking press conference opportunities, a publicity splash, but it's not necessarily motivated by desire to come up with real solutions. I think politicians have this vague notion that what we need to do is be building more houses, but, it's not really as simple as that. One of the things we have to do is incentivize people to become landlords. We've got to incentivize mum and dad investors. That's where 91.4% of the homes that people rent in Australia come from ordinary investors, not government, not big companies, just mum and dad investors. And they've been, over the last 5-10 years, been massively disincentivized. They've been demonized. They've been scapegoated as, the problem, when in fact they're the solution. And it's the constantly passing of regulations that favour massively tenants over landlords, and the increasing of taxes on investors. That is, the huge part of the reason why we have this incredible rental shortage, and it's just getting worse and worse. And we'll probably continue to, because there's no solutions being presented.
That's a good segue to my final idea on what we could do, Terry. Now, this is going to be controversial, because I'm going to suggest that instead of having a building allowance rate where you claim the depreciation of the building over a 40-year period at 2.5%, increase it to 4%. So it'll make it more attractive to investors to invest. Hopefully, the developers will be able to get more off the plan sales, which will enable them to get funding to develop. And the government claws it back when they sell the property anyway. So it'll make it look more attractive now when we need it to look more attractive.
Yeah. Well, the problem is, there's been various talk fests called by state governments in various jurisdictions around the country, and they invite all the usual suspects. But I don't. Have you ever been invited to one of these talk fests, Tyron?
I only got invited once they changed the tax law, and the Treasury Department got me in to give me advice, but they'd already changed the law, and I was just having industry consultation. They'd already changed the law, Terry.
But they never invite the real stakeholders, the people who actually have the solutions, are never invited to these talk fests. As people from the Social Security end of town, and someone representing the developers, the Property Council, everyone just goes in and argues their vested interest. But there's no real solutions being presented because the people who have the answers aren't being invited and aren't being listened to.
Yeah. All right, let's move on. That was interesting. I was on a forum the other day, a Facebook forum, wasting my life away. And this particular forum, they were very pro-Perth. And I said, I think Perth looks cooked, right? And geez, did I cop it. And then, and they said, why? I said, look, all I see in my Facebook feed are people having the next hotspot, and it happens to be in Perth. Download this report. And by the way, we happen to have a house and land development for sale there as well. And if all I see is buy in Perth, as you know, I like to do the opposite of what everyone else is doing. I wouldn't buy in Perth. So I thought it was cooked. And then I saw an article the other day that you've released a report that you suggest Melbourne is better than Perth at the moment. And I'd say, why, Terry, with all those taxes down in Victoria?
Yeah. Well, a very good question. We're actually doing a webinar, and we're saying why Melbourne makes more sense than Perth. Look, what you've just referred to is what I call the loudest noise in real estate is always the voice of vested interest. So the people are advocating the Perth boom is just going to go on and on. Buy in Perth, you'll make $1 million. You look at who they are, and they're all people who stand to gain massively if that is true. So it's always really important to choose who you listen to when it comes to advice in real estate. People with a vested interest, you need to be a little bit cautious about accepting their advice. Right now, you said it's cooked. I think you're right. Our research indicates that after 3 years of very strong growth, Perth has peaked or past its peak. People are still piling in there because that's what investors do. They herd animals. When 3 years ago, when we started recommending Perth, no one was interested because its track record of the previous 10 years was hopeless. It had shown, in fact, most suburbs in Perth had a negative and a minus in front of their capital growth figure for the previous 10 years. So people were saying, why are you recommending Perth? It's hopeless. We said, well, it's about to change. Now's the time to get in there before prices rise. No one wanted to buy there. Now, when the market is cooked, and it's reached its peak, and after 3 years of strong growth, now everybody wants to buy there, and it's just the antithesis of smart investing. That's why we think Melbourne makes more sense, because Melbourne is kind of positioned where Perth was 3 years ago. Well, Melbourne hasn't had any price growth for the last couple of years, but we look at the underlying factors, which are forward indicators of price growth, incredibly strong economy, the strongest population growth anywhere in Australia based on the latest figures from the ABS, a big uplift in sales activity recently is always a precursor to price growth, but it hasn't had any price growth since about 2021. So everything's building for the Melbourne market in particular to have a period of growth, and it's kind of positioned where Perth was. And people are saying about Melbourne now what people were saying about Perth 3 years ago. Why would you want to buy there? Now, the big detriment about Melbourne is, of course, the attitude of the idiots who run the state government, who have got a lot of anti-investor policies, and that naturally will deter people. But for those who can get over that hump of, the taxes and the general let's slam investors attitude of the state government for God knows what reason, because it's just going to make the rental shortage worse. If you can get over all that, you can buy pretty well in Melbourne and other parts of Victoria right now, and there's going to be some capital growth, we think.
Do you own an investment property? Washington Brown has helped over 250,000 property investors pay less tax with the depreciation schedule. Visit washingtonbrown.com.au to pay less tax today.
All right. Are you ready to play 10 with Ty, Terry?
I was born ready, Tyron.
He's funny, isn't he? Terry, what has been your best investment?
I reckon it was my first one because it got me started and it taught me that ugly real estate grows in value, because I bought the ugliest house I could possibly imagine. It cost me $25,000. This was in the 1980s, so it was a long time ago. It seemed like a lot of money at the time, but it was an ugly house in a down market suburb. But it grew in value. I mean, 2 years later, I sold it for $40,000, which is a pretty big capital growth rate. And I thought I was a genius, and I bought something better. But that first purchase taught me that ugly real estate does grow in value because people are always looking for something that's affordable, located close to things that are desirable. It was close to a train station. It was close to shopping, close to schools, but it was ugly. But it doesn't matter.
Fantastic. I thought you were going to say starting hotspotting would have been one of your best investments.
Well, actually, if you ask me what my second best investment was, I might have said that, because I will, in an answer to some other question, I would say that investing in yourself is one of the best investments you can do. I think people should do that. I know successful people are always, they're readers, they're always doing courses, they're always, they have mentors. Even really super successful people still have mentors because they're always trying to be better. And I think that's a great attitude. Invest in yourself is a good answer to that question as well.
That's been the overarching theme in this podcast, actually. I think Dale Beaumont said he spent $750,000 on self-education. Terry, number two, what has been your worst investment?
Honestly, I put my savings at the time into shares in a property company in 1987. The next day was Black Friday and the share market collapsed and that company disappeared and I lost all my savings. And what I like about real estate is it never does that. I mean, property prices do fall at times, but they don't collapse to nothing overnight the way share markets can do. That was my worst investment. What it taught me, though, it did teach me a very valuable lesson, which has served me well over the years, and that is you really need to know a lot about what you're putting your money into. And I knew nothing about shares. I just got caught up in the frenzy at the time. As you know, similar to people piling into Perth without thinking about what they're doing, not doing proper due diligence. It's a very similar syndrome. I got caught up in the share market frenzy in the late 80s and I lost all my savings because I didn't know anything about it. So I learned to invest in what I know well, and that's real estate.
Yeah. Well, that's why this podcast started. My father lost all his money in all his superannuation in the late 80s in a company called Estate Mortgage. Do you remember them?
Oh, yes.
Yeah.
Legendary disaster.
Yeah. So he did it. They advertised they were safe as houses, but really, and they were investing in bricks and mortar, but really they were putting it into mezzanine funding for developers. And then when interest rates went to 17%, all the house cards fell down and he lost pretty much everything. You mentor a lot of people. What mistakes do you see people making? What are the worst mistakes that other people make?
Well, property investment, look, there's a whole range of them, but the biggest one is a lack of willingness to invest in information and advice. So many people want to do property investment on the cheap. They'll borrow money and buy the big, do the big spend, which is buying the piece of real estate, but they won't spend relatively small sums of money in good advice, a good accountant. Paying for a depreciation report.
Good answer.
Getting advice from a specialist property lawyer or an accountant on the right entity to buy in. Mentors, buyer's agents. These are relatively small investments to make sure that the big sum of money you spend is spent in the right way. And most people aren't willing to do that. And that's the worst kind of false economy, I think.
Fantastic. All right, question number 3, Joe. What's been the most valuable investment advice you've ever received?
Well, it harks back to a very recent comment in this conversation. Invest in yourself. And as you said, it's a recurring theme in this podcast. But all the really successful people that I know personally are people who are constantly investing in themselves. They're readers, they're podcast attendees, they go to seminars. They quite often spend a lot of money on mentors, even though they mentor people themselves. And I do that. I mentor people, but I have mentors and my mentors have mentors. So you invest in yourself, follow your passion, you'll be successful, and then you invest the profits in real estate.
I'm in a business program called Business Blueprint with Dale Beaumont. Don't know if you know it. They recommend being in that program for 1 or 2 years. I'm up to my 12th year. Can't get rid of it. All right. Question number 4, Terry. What's your ideal portfolio mix of shares and property, commercial property, etc.?
Well, for me, it's all real estate because that's what I know. And I learned that lesson back in the bad days, 1980s. Don't invest in things you don't understand. I just don't have the time to become really educated about other things. So for me, the ideal investment portfolio is, well, I suppose it's not just real estate, it's my business first and foremost, because that's probably my most valuable asset. That's my superannuation. And so that's an important investment. Beyond that, it's real estate. And within that, it's having a portfolio with diversity. That's really important, I think, to have geographical diversity and also diversity of property types that you buy. It always amazes me when I do mentoring sessions with people, how many people own 5 or 6 properties and they're all in the one city or they're all the one type of property. They don't have any diversity and they're very vulnerable to, because we don't have one holistic market in Australia. You know, right now we've got some markets booming, but other markets like, say, Hobart and Darwin, Canberra are actually going backwards. So if all your properties are in places like that, you've got a pretty sick portfolio. So diversity is, you know, the really important thing. So you have some in cities, some in regions, sprinkled around the country, reduces your land tax amongst other reasons. And they have some that are like set and forget, some that are value-adding opportunities, some that are redevelopment opportunities. So, you know, I'll learn about real estate by having a mix of types as well as geographical diversity.
Yeah, land tax is a huge issue. If you've got all in one state, you're going to be paying a lot of land tax.
Yeah, and they're all in Victoria right now where they've dropped the threshold to pretty much nothing.
Right.
Yeah, I was got a bit of a shock when I got a land tax bill from the state government of Victoria. We hadn't before, simply because they just lowered the threshold. Another example of their hell-bent trying very hard to discourage investment in Victoria for some reason.
Yep. From your experience, this wasn't one of my questions, but what's performed better over your data tracking life? Regional areas or capital cities? I know there's lots, you're going to say which region, but if you just average it all out to regional areas versus capital cities, what's performed better over the last, say, 30 years?
Well, I can't tell you over the whole period that I've been around because it's been a very long time. And, you know, the sort of data that we have available now didn't exist back when I started, but in the last 5 years, definitely the regions have outperformed the capital cities. But the latest evidence is that that's starting to now change. So I think probably when 5 years from now, when we look back, we'll say the past 5 years, the biggest cities have outperformed. But certainly the previous 5 years, it's been the regional areas, and it's been really that big trend we call the exodus to affordable lifestyle, people moving to the regions, the smaller cities, seeking lifestyle and affordability, enabled by technology. You know, people are able to work remotely. You've done it. I'm doing it. Pretty much everybody I know, the modern business, everyone's working from home kind of thing. And technology has allowed that to happen, and that's precipitated this big trend of people moving to lifestyle areas, to cheaper, more affordable regional areas. But I think that movement is still happening, but it's peaked. And we now have got the bigger cities starting to perform, boosted by migration from overseas. You know, Sydney and Melbourne have been hugely pumped up by that recently.
Yep, fantastic. All right, question number 5, Terry. How would you invest $20,000 as a 20-year-old?
I would invest it in a good buyer's agent, a mentor, a good accountant, a lawyer, good research information, a mortgage broker, and maybe even a quantity surveyor. No, I'd put that money into advice and information, because I've got this fundamental belief, and I think everyone should have this fundamental belief, that you build your team before you build your portfolio. It's so important. You want to rush out and buy a piece of real estate using that money as a bit of seed capital, you're likely to make mistakes. And I have a podcast and ask people, you know, about the mistakes they made when they're young, and everybody, all these very successful people that I interview, including yourself recently, you know, early on made some very serious errors because they didn't know enough. So that $20,000 most profitably could be put into advice, mentoring, information, so that your first big move into real estate will be a smart one. And out of that success will roll the second, the third, and the fourth ones.
Mm-hmm. Now, okay, I agree with you on buyer's agency. I think they can be very useful, but how would you choose which buyer's agent? Wouldn't you choose which area you wanted to buy in first and then choose the buyer's agency? So what you could do is buy some of your reports, buy some SQM reports, or listen to Peter Cozzulio's, have a bit of a heat map of Australia, go, okay, all three reckon Cairns is good, and then find a buyer's agency in Cairns. Otherwise, if you're just finding the buyer's agency first, aren't you going to just end up where they have a specialisation?
Well, it depends which buyer's agent you get, and I would always urge people to get a recommendation from people who have had experience with professionals. Don't just pick one out of the phone book. Talk to people you know and say, who would you recommend? But some very good buyer's agents operate nationally. They might be based in Sydney, but they have either offices in the major cities around Australia, or they have contacts that they can use. Or you can do it the way that you recommended. I think before you get to the point of having a buyer's agent, you want to have the mentor person. You want to have the research report. So, that's something we provide. A lot of people, before they buy, they'll just have just a one-off strategy session. And we talk to them for 45 minutes about what they're trying to achieve and then, what they already own, all their background information. And then from that evolve an idea. Well, it seems to me that you should be targeting, say, regional Queenslanders. You're looking for affordability. You're looking for high rental yields. And you're looking for potential capital growth, and regional Queensland has lots of centres that can offer that. So then we start talking about location, and we'll send them a report at the end of the discussion to support what we've been talking about. So that's a good starting point, and then you can maybe look for the buyer's agent to help you find. You might find a specialist in that area, or you might find a national operator that can help you with that as well.
Yeah, I really think it's important to get a recommendation for someone to actually use that buyer's agency before. Seems to me they are breeding a bit like rabbits at the moment, and a lot of the skill set seems to be their social media skills rather than having themselves create a big portfolio.
Well, a lot of them have a skill set of zero, quite frankly, Tyron. Honestly, that they are breeding like rabbits, and they don't necessarily, a lot of them, have anything to offer. And it's very, very, I think it's dangerous for the industry that, all you need to call yourself a buyer's agent is a pulse, basically, and a website. We're not even that. So people need to be careful that they get a recommendation about a buyer's agent that's got experience and knowledge and something to offer. I mean, you might be spending $10,000 or $15,000 with these people. If all they're going to do is go online and search for properties for sale, you can do that yourself. You want someone who's got real expertise, so you need to be careful about who you choose.
Excellent.
10 with Ty is brought to you by Washington Brown, the property depreciation experts.
All right, Terry, question number 6. You've just turned 50, you've got no money, but your parents passed away, sadly, and you've just inherited $500,000. How would you invest that money today?
Well, I think $500,000, that's a nice sum. You could leverage that into 2 or 3 really good properties with high rental yields. I mean, if you're over 50, then you're probably thinking about retirement. And so you'd certainly, you wouldn't want to just go out and buy one property for cash. You'd leverage it into maybe 3 properties, which have high rental yields, and it can help set yourself up to fund your retirement.
Fantastic. All right, question number 7. If you go back in time, Terry, and get that DeLorean to see yourself, what would you tell your 20-year-old self about investing?
And 3 words, never, ever sell. Terry, that's 4 words. If I knew then what I know now, I'd still own some of the things I bought back in the 80s. I've mentioned the first property I bought for $25,000, but the second one is more pertinent to the discussion. It was in Brisbane. It was actually an inner city suburb. It was a very humble house, but sitting on a hill with views up the Brisbane River. It cost me $50,000, and I sold it a couple of years later for $110,000. I thought I was a genius, but the land alone today would be worth well over $1 million.
Yeah, right.
Yeah. And if I'd understood, the importance of buying good real estate and keeping it, accumulate, build a portfolio, I would still own it, and I'd be much wealthier today than I actually am. So
when you sold, were you trading up? Were you putting those properties?
I was selling to buy better, and the whole mentality and culture around property investment didn't really exist then to the way it does now. And I think more people today would understand that you start young, buy something you can afford, If you buy wisely, it'll grow in value and give you equity, and you can buy more and more. But you keep that real estate that you buy and build a portfolio rather than trading, because when you buy and sell, you're losing a lot of your profits in those costs, capital gains tax, legal fees, stamp duty, and all of that.
Yep.
Yeah, I'd love to have understood when I was in my 20s that never ever sell was the way to go.
Well, hopefully someone 20-year-old listening to this and taking that advice.
Yeah.
Question number 8, Terry. What legacy do you want to leave your family or your community?
Yeah, for my kids, I've got a couple of girls who are in their mid-20s, and what I've always said to them is that, follow your passion. I think that's the secret to a successful life. Not try to become wealthy or do what's sensible. Identify your passion and make that your career. And people who do that very often are very successful. I think I'll certainly gave them that, because since they were little, we would go to Europe and other parts of the world, and they just spend so much of their time. I mean, their concept, their future isn't Australia, it's the world. And I think that's great to have that. But I'd also teach them about property investment, that, start early and accumulate. You can do that and still travel and have a successful career. If you're going to be renting, you might as well be putting that rent money into property owned yourself. And sometimes it's, equal cost or even cheaper to own than probably not in Sydney so much, but in other parts of the country. An understanding of the importance of shelter is one of the basic needs, and how important it is for the community, for the country, via our politicians to do it better, because we've created a situation where it's incredibly expensive to build and create new dwellings. And there's a shortage, and there's no fix in sight, and it's just become a huge, huge problem. We literally do have people out there sleeping in cars, living in tents. Every town in the country has that, and it shouldn't happen in a country with the wealth and wisdom of Australia. Maybe not so much wisdom as wealth.
I think you're leaving a pretty good legacy for the property industry, Terry. What does success look like to you, Terry?
Actually, it looks pretty much like what I'm actually doing in 2024. I think a little bit like yourself, because I know a little bit about your lifestyle, but for me, it's like owning my own business, working from home in a lifestyle town that I love and don't plan to ever leave, contributing to the success of my business with maybe less time than I have in the past, because I've worked very hard to get to this point, putting in a few hours, but, still being part of the business, giving myself more time for family, for travel, and for writing. I published 4 books in the past. The last one was a long time ago. I want to get back to that. I want to write books on not just real estate topics, but a whole range of things that I'm interested in. Not novels. I don't want to write novels. I want to write non-fiction. I want to research a subject and write a really interesting book about it. So I'm doing most of that already. So in those terms, my terms, I'm successful.
Fantastic. Love it. Look forward to reading that book. Question number 10, the crux of this matter. Now, as you know, my father lost all his money, as I said before. So this is what this podcast is about. Now, Warren Buffett quoted saying, rule number 1, never lose money. Rule number 2, never forget rule number 1. Terry, how do we never forget rule number 1?
You go about real estate investment the right way. If you buy the right real estate in the right place, paying a sensible price, and areas with credentials for long-term growth, you don't buy in high-risk areas like tourist towns and mining towns. You don't become a herd animal and pile into Perth when it's at the peak of its market. You do research, you have mentors, you put money into information and advice, and you buy sensibly. And if you do that, you're not going to lose money in real estate. We from time to time, very often, in fact, we have economists and others with doomsday prediction. Prices are going to fall 15, 20%. When COVID struck, one of the big banks had forecast a worst case scenario of 33% drop in our property values. Didn't happen. Nothing like that has ever happened in Australia. We don't have the credentials for that. We have a very strong economy. We have high rates of employment, and we have a shortage of real estate. So real estate is a really safe thing as long as you go about it sensibly. You're not going to lose money, and you're very likely to actually make money doing nothing, making money while you sleep, by just doing it sensibly. And And that's the key. You've got to go about it the right way, and that means not being a herd animal. Now, the people who succeed in real estate are actually people who detach from the herd and very often and run in the opposite direction. So rather than buying in Perth, which is cooked, as he put it, thinking about places like Melbourne, which are seriously undercooked.
Yep, I love it. And also, I guess overgearing is one issue people get in trouble with. But no, I tend to agree. That's a great answer, Terry. All right, Terry, my final thing. As I do this with every guest, I ask a surprise question about their specialised topic. And guess what yours is going to be about, Terry? It's a bit of a no-brainer. We did a recent podcast together where I asked you to, a mythical thing, I said, let's cut up all the capital cities in Australia, put it in a hat. I said, Terry, you're only allowed to choose one capital city as your favourite. Where would you invest right now? And you chose Adelaide. Now, I want to drill that down a bit further. What are some areas within Adelaide that I want to start looking at myself, Terry?
What areas within Adelaide?
Yeah, suburbs or...
Yeah, well, again, the answer depends on you and how much you've got to spend, for example. One of the beautiful things about Adelaide is it's so affordable relative to the bigger cities. It's about roughly half the price of Sydney, and it's very significantly cheaper than Melbourne or Brisbane. So, you get a lot of bang for your buck in Adelaide. You get more real estate for a certain level of expenditure than you do in some of those bigger cities. There are good buys all over Perth. If you're a $1 million buyer, in Adelaide, you can get some pretty great real estate. What you pay $1 million for in Adelaide, you'd be spending over $2 million in Sydney and Melbourne probably.
What about a cheap suburb?
Suburbs like the local government area of Salisbury in the north. It's a kind of a nice mix. Some of those northern suburbs of Adelaide are pretty rough, very down market, and some people fear to tread there. But there's within the city of Salisbury, there's suburbs like Salisbury itself, and there's various other suburbs with Salisbury in the name, where you might be buying in the 400,000 and 500,000s. Good solid real estate. It's not luxury. It's not spectacular. But I bought one myself 3 years ago for about $310,000. It's now worth maybe $550,000 3 years later. The rents, the property I bought for $310,000, the rent's now $550 a week, so the rental return is great. Adelaide was providing that back then. Prices have moved a bit since then, but it's still got more to go because it's underpinned by the strongest economy in Australia, according to CommSec with its State of the States report. South Australia ranks number one. Surprised a lot of people to know that, but Adelaide's a pumping place. It's got this incredible innovation reputation. It's the high-tech innovation capital of Australia. It's got a big education economy. It's got a big military economy. It's a great lifestyle city, and it's affordable. So lots of good places to buy. One place I'd recommend you look if you're wanting to buy there is the city of Onkaparinga, which is down in the south. Includes Bayside suburbs like Seaford, where the median price is still around about $500,000, which is pretty affordable for a Bayside suburb, which has got a train station. You can take the train into central Adelaide. You can go in by the Southern Expressway. And not far from there is the McLaren Vale wine district. So it's got a lot of lifestyle down there in Onkaparinga. Bayside suburb, wonderful wine district, which I visited about a year ago and had a lovely time. But really good, affordable real estate that's affordable to most people. And then if you've got more money to spend, there's suburbs that are close to the centre of Adelaide. But the place I really like for people who've got $1 million to spend is the Adelaide Hills. I just think it's the most wonderful, hill change. 30 minutes from the centre of Adelaide, you've got this wonderful hills district with suburbs like Stirling and Harndorf. Mm-hmm. Gorgeous places, beautiful homes, and if you need to go to the city, you can be there in 30 minutes. And within 20 or 30 minutes drive, you've got the Barossa Valley, you've got McLaren Vale, you've got three, actually, great wine districts. I'm talking rather too much about wine, but...
Where can people go and find these reports on whether Melbourne's better than Perth or the suburb you've just recommended? Is there somewhere on your website they can go pay and download.
hotspot.com.au, and we have a range of services and products, but include you can just buy one-off reports. One of them is like our national top 10 best buys report. So these are our 10 picks at any point in time, best places to buy, different price ranges, so hopefully something for everybody in there. But you can buy a specialist report, top 5 Adelaide, top 5 Melbourne, Sydney, also regional markets. Not every, because South Australia, for example, doesn't have enough substantial markets outside of Adelaide to have a top 5 regional South Australia, but we have those reports for New South Wales, Victoria, Queensland. We have reports that focus on properties with locations with above average rental yields, because that's very top of mind for people now that interest rates are higher than they were a couple of years ago. So we have a positive cash flow hotspots report. We have a thing called the Pulse, where we've got 50 locations where you can get above average rental yields in places that have actually credentials for growth as well. So there's a big range of reports that people can get.
Well, I think for investors, it's a great way to start their investment journey or their skill set, or they want to keep going on their investment journey, is to start on the Hotspotting website. Terry Ryder, I've really enjoyed this chat. Thank you for being part of 10 with Ty.
Most welcome. Always love talking about real estate. The hard part is getting me to shut up.
Thank you very much, Terry. Good on you.
If you own an investment property, then Washington Brown can help you pay less tax with an ATO-compliant depreciation schedule. Visit washingtonbrown.com.au to pay less tax today.